Joining us right now is Carter Copeland. He is founding partner and aerospace and defense analyst at Melius Research. By the way, he's got a buy rating on Boeing and a $521 price target. Do you think about that at all today, Carter, in terms of this latest news? Does that change your mind about the price target or whether you'd be telling people to buy?
Yeah, ultimately, Becky, I think what matters is, longer term, what happens to the 737 program when you get to a sort of return to normalcy. So, there is a point where, you've got, somewhere between 12, 13, $14 billion worth of airplanes sitting on the tarmac. At this point, there is a tipping point where you consider, halting production. So I think this is a natural evaluation the more the return to service assumption slips to the right. However, at some point, you get that return to service, you ramp back up, and you get an earnings and cash flow profile out on the horizon that ultimately will be what the stock is priced on. And so, this news, what you evaluate is there anything permanent in terms of the impact on the productivity of the workforce and in the factory, and that will be left to evaluate. So as we think about what the company can ultimately earn, that will influence price targets, but that's a good ways off, and right now everyone's focused on the short
Carter,
term.
let me ask you this: you've got a $521 price target. Is that in the next 12 months? Because I think the bigger
24.
question in the next 24 months. Okay, so you are talking about a longer term, because I think what we've been hearing for a while, and what the FAA administrator drove home last week on the program here when he talked about how they're going to be on their own timeline. It doesn't matter to them what Boeing would like to see happen. I think they are much less focused on the fallout for Boeing and the suppliers, and much more concerned about the safety and what that's going to mean, and making sure that this is something that other regulators around the globe can kind of follow and feel confident in their decision.
I think that's right. But look, I think what the market is going to do is say, when is the first year of, let's call it, normalized earnings and free cash flow? And that's not 2020. It's not 2021. The market is really settling on 2022 as that first period. And so what is the number out there? I think, a decent set of assumptions is going to get you in the, $31, $32 a share in free cash flow. And on a relatively average multiple, that's going to get you north of $500. Now, the question will be, are there lingering impacts on productivity that end up reducing that number by $1 or $2? I think that's where the debate has to shift. And, ultimately, 12 months from now, I think we'll be firmly focused on those sorts of numbers, not, what were the non-recurring costs incurred from halting production.
So two quick questions. Given how far Boeing is from the first best, they are so deep in the fourth, fifth best as what to do with the 737 MAX. Question number one is, in this period, to what extent do clients start switching away to Boeing in favor of Airbus? Question number two, Phil referred to the longer-term impact on the suppliers. Can you talk to the longer-term impacts on the suppliers and the workers?
Yeah, so question one, you can't switch. So, Airbus is struggling to deliver, the planes they have on order. So the industry is incredibly capacity constrained. So to the extent Boeing doesn't deliver the airplanes, customers just aren't going to have that lift. So, both manufacturers are sold out for a long time, and it's just there isn't an ability to switch like you'd find in so many other markets, which is why Boeing stock is where it is and not down a lot more because of this industry structure. In terms of the suppliers, Phil mentioned Spirit AeroSystems. They're more 737 than Boeing is 737. So. They're going to get impacted. The GEs of the world, which makes the engines solely for the 737, they'll be impacted. The same sort of calculation will happen at those firms that you find at Boeing, which is when I furlough employees in a production halt, how many of those people do I lose in a tight labor market, and what's the impact when I need to ramp back up on the productivity? There will be some impact, whether that's 100 basis points of profitability or 300 basis points of profitability. That's kind of what you talk about. So that's not catastrophic, but it is an impact. And for some of those firms that are really, struggling, that will have an impact on, go forward profitability.
Hey, Carter, thank you for joining us today. And again, I just want to point out to the viewers at home that $521 price target is a 24-month price target, which makes it look a lot more reasonable.